Welcome, everybody. This is Dr. Zoo on a Monday holiday for some of us. Not for Dr. Zoo. He's been working his little ass off all day today with the team. Team is busy, everybody. I can understand that we got some people listening in. If we got one, and go the blood. That was an intro for the start of this session today, which is episode 79. Here we are, Monday, the 8th of June, 2026. And that little recap there will be sending a messages to some of the extraordinary, bizarre, unbelievable things happening on planet Earth. Got to talk about planet Earth because some people are getting confused now between the moon and Mars and what's happening as a result of SpaceX. Welcome, WA. Good to have you on board. Welcome and welcome. This is a very interesting little program today. So let's just get to the bits and pieces. Oh, Fraser Coast, Queensland, Thailand. Welcome, Thailand. Fantastic. Love you people. Awesome stuff. We're on the cusp of greatness, I can tell you. Now, Dr. Zoo has had some big visions in the past and still does. He has big visions. But Elon Musk, he's in a separate league. He's out there. He's already at Pluto. Brizzy Vegas. Hey, that's what a great spot there too. Middlemount. Keep coming, people. Love it. Love it. We're going to be certainly focusing our attention on planet Earth. Dr. Zoo's not the slightest interested whatsoever in Mars or intergalactic travel or Dr. Spock. Bit of a relation to Dr. Zoo, I suppose, but there you go. Dr. Spock, as we talk about some of the craziness in the world. Well, let me just say this. We haven't heard from Austrac anything, people, so that's a good sign. That little clock keeps ticking. We're very, very happy with our position, given the boys at the back end had a great weekend in the success of the iOS instant locking in between a ZooCoin wallet and a Zootopia. Absolutely thrilled. Thrilled to bits. Yes, that's one of the great things because that brings the Zoo Vision into play as we get ready to and count down. Can assure you, people, that we haven't been sitting idle. Plenty of work going on. ZooCaz is running now at 1,000,000 miles an hour. For those that don't remember, that's the AR mass distribution we're getting pump primed for, particularly with our great friends in the US of A. Welcome aboard. And let me say, our even better friends through Europe. We've got some really good players opening over there. Fantastic. Of course, all of our Aussie mates in this great country of ours. How would you be, eh? I've just got to digress for 1 second. Look, 1 second. You know, we got this premier down there in Victoria, Jacinta Allen. She's the head of our great socialistic Labor Party. She followed in the footsteps of Dan. Now, someone comes out with a sign, "Ditch the witch." Now, you'd think you'd wear that as an honour badge, and then all of these people come out from left and right, and they're whinging. Oh, this is terrible. You can't call her a witch. Well, I've got some better names for her, I can assure you. But, when you use people's money like that in the public sector, you are a servant of the Victorian people. A servant. She'd be lucky she'd be called a witch, because that's exactly what people think about what she's achieved. Hasn't achieved anything. But anyway, and the great woman, Julia Gillard, she comes out of the block suddenly. She's been laying low, hiding over there somewhere. She's the one that carried on like a pork chop about names. I mean, they're all big sooks, big names, and all of a sudden she comes out and supports Jacinta. Oh, my lordy. It is that person, whatever you want to call her, Julia Gillard with the Greens, that caused the entire mess of the definitions that are in the Discrimination Act as to what is a woman. She doesn't even know what a woman is. So how would she know what a witch is? How would they know? What's a witch? Does that mean there's a gender issue now with the definitions of witches? Well, Dr. Zoo can't work it out. He's a bit confused. But anyway, maybe there's a trans witch, because if the definitions say what it says, it means one thing. Under Julia Gillard's regime and supported by the great Jacinta Allen, Like, they don't even know what the gender the witches are, let alone the fact they think that men can get pregnant. Dr. Zoo felt a bit pregnant the other day. Wonder what was going on. Had a bit of a crook guts. Got out the little stick, shoved it where, and it came back. It was all clear. All clear. So don't panic, people. Dr. Zoo has got some more legs left in him yet. Don't you worry about that. But there was a scary moment. Having listened to the Senate inquiry, Dr. Zoo thought that he was going down with pregnancy. It's a new condition. All those males out there, if you think you're safe, be wary. The only way around that is just make sure, be careful that, it could be contagious. Just be careful when you do the job that you don't overdo the job. Well, let's get back to the situation with the progress. The boys are doing great, really great, people. So right here, right now, the view is if Austrac rocked up in the morning, we don't know when they'll come back. They've obviously got that time constraint, but they come in and they say boom, and there's only two outcomes, right? Remember, there's only two outcomes. One is they review the law and they say, well, look, given all that situation, we've using our discretion, we don't think Zootopia needs to be locked and loaded with the entire compliance issue. Away you go. We will publish whatever comes in from Austrac. The second choice is that they come in and say, yes, you need to be registered. Now, generally, most of you are a great, caring bunch of people. You're all part of the ZooCoin family, but you don't worry about Dr. Zoo having to spend a few more bob to cover that situation. We've got that covered. Just got to win a few more races like the Great Alligator Blood. And I'm going to introduced Alligator Blood. I know it's unusual to put a horse situation into where we sit, but it's directly relevant. Some people come out and say, what the hell's that got to do with Dr. Zoo and what we're doing? Well, it has a lot to do with the psychology of humanity. Now, as you know, well, firstly, let's just go back to the Austrac. If they come back, people, with whatever the outcome is, we will publish it and we will press the green button. Riley has got very clear, unequivocal instructions. As soon as that hits the email file, press the goddamn button. We will be starting to trade. We're getting very, very excited now because then we can fire up the engines in a big way for what we've been waiting for from my side, Dr. Zoo's side, which is the mass marketing with the contracts and things we've got ready to rock and roll. We'll still roll it through the process. We want to hit 20,000 wallets and then go from there. But there is no, well, the only upper limit, given what I've read in SpaceX now, the IPO, we can start to plan on getting some people that will be living on Mars to be signing up for wallets by the looks of the IPO. But anyway, we'll talk about that in a minute. But the relevance, people, of the alligator blood is this. Welcome, Thailand. Beautiful. You're wonderful people up there. Now, let's think about the connection. Dr. Zoo likes big vision. He always has. As you know, this is the 27th year that we're coming about, that at some stage very soon, we have the rights, which is on the website, that the concept of the damages claim against the Australian government, 4.3 billion plus interest, will be pursued into the High Court for an outcome, one way or the other. One way or the other. You might think it's crazy, but that's been a mission. And then part of that reason is because the entire concept of the $4.3 billion claim, people, came about nearly 30 years ago because of the globalised lottery concept that was to be launched that the government stuffed it up. That's on the record. And funnily enough, you wouldn't believe it, the boys are working and have been behind the scenes on testing tokenisation, locking it into the extraordinarily wonderful ZooCoin split chain concept. Had a little bit of story the other day. Dr. Zoo was listening to Larry Fink, and Larry was going on and on about it. We kept a little copy of that, actually, of what he said about tokenisation. Don't get distracted by AI or going to Mars with SpaceX and satellites. Zoom back in on the firepower of what's globalising the world of real-world assets and that is tokenization. And we are in box seat. We're in box seat. Why? Because none of these blockchains can perform the outcomes that split chain can do and has been doing and will continue to explode in growth because of utility. Now, see the Bitcoin is down to 62.5 odd. We got the Iranians, as Dr. Zoo thought, true to their form and true to their religion. They want to destroy everything, so they're off and about with a few more rockets around the place. Trump has been a bit reluctant lately. I'm not sure what's going on there. He should just put that big one on top of him, and that's the end of it. Because they're going to sit on that uranium, they're going to sit on that nuclear stuff, and they're going to continue to be a threat no matter what you say or do. Release the money and they buy some more uranium from God knows who. But let's not get too worried about that. They're contained at the moment. But the background tells you otherwise. 2,500 years of dribble tells you otherwise. Well, actually 1,400 years. We'll do the maths a bit proper later on. So let's talk about big picture, because it is directly relevant to today's story. Directly. So there's alligator blood. There's the lottery we talk about, which is the court case. 4.3 billion is on the foot. Now, we might lose that, but that tests the High Court mantra, Section 83 of the Constitution, which is relevant today because these governments continue to breach Section 83 and no one gives a stuff, but Dr. Zoo does. Dr. Zoo is concerned for the Australian consumer and what is happening around the world with bureaucrats losing money. They waffle on about increasing taxes and then they lose it. Look at that witch down there. Oh, sorry. Look, I'll take that back. I cannot use the word witch because I am not certain what gender I'm talking about. Could be LGBTQA or Z, whatever you're thinking. Dr. Zoo can't get a handle on what is a witch until Parliament prescribes some new regulation about witches. It's important. Once we do that, then we can isolate the issue and attach that particular moniker to certain people. It may not be just women. It could be, well, we don't even know what women are. Another mistake of Dr. Zoo, apologise for that. But genetically, whatever you want to call what we are. So, if you think about that in the context of big picture, Dr. Zoo's got a lot of big pictures on his plate, big pictures. One, we've talked about it, it's on the site, the Zoo Vision. It's about mass adoption with no limitations other than the size of the population. So we're not suggesting, Dr. Zoo hasn't sort of run around out there and said that 8 billion people are going to sign up, but there is a good level of 4 billion phones or more between Android and Apple in the marketplace. So we know that for a fact because that other great visionary, Steve Jobs, he had a vision. He said, listen, why shouldn't everybody have a phone? I mean, what a remarkable achievement, because that's where the data comes from. That's where you get on the phone. You have social media, you have these aggregators, you have all this big gun companies like Google and all the rest of it. And they took you as a consumer and your friend merchants as hostages because they are the ones that aggregated all your data and throw these ads at you. Merchant gets a 0.08% success rate. He gets sucked into paying all this money. In fact, people, let me tell you this. The numbers are mind-blowing. Nearly $900 billion last year came in the front door to a handful of these big corporates who then went about their business, sucked in all that money. Now they're putting it back into AI. You can see the expenditures there through the SpaceX IPO. Massive billions and billions. Anthropic, which is your Claude. Now don't get me wrong. Dr. Zoo does embrace AI, but not stupidity. Stupidity is one of the pet hates of Dr. Zoo. People generally are stupid. So merchants spend all this money. They get bugger all conversion rates on. All they want to do is sell their goods and services. You, the consumer, get sucked into providing your information. Hardly do you end up, you buy what you want when you will. So you end up using these aggregators. The aggregators in turn like Mark Zuckerberg with less than 14% control, sucks in his shareholders and decides to write out another big check for 60, 70, 80, 90 billion dollars and dump it into this hardware, this technology to expand AI. At the end of the day, you think about it. They don't provide a free service. They're either going to force you to have more subscription costs for the AI to use, which works well, by the way, or it'll reinvent itself and end up AI will take control and they won't be able to control it. Anthropic's warning about this now. So there must be a warning signal there somewhere that says, listen, we can't control it. And you know what that means? They can't control the revenue, because whether you have AI or not, the name of the game is getting money out of your hard-earned pocket. Your pocket funds these characters. And the irony is, if they accumulate these revenues from you, the consumer, they get it, and then they start to pay taxes, and all of a sudden, billions of dollars filters in two paths. One, to the corporates and the conglomerates that run this show, who are abusing people. The actual intention of what capitalism is. Got a thesis on that, by the way, too. Capitalism versus stupidity. And that stupidity doesn't matter whether you come from the left or the right. It's all part and parcel of stupidity. So let's think about that. This accumulation of wealth goes in the pockets of a few, which is okay. That's what they've earned, they've done. But then there's a tax that comes in and it goes into a pocket of even another bunch of characters called politicians or bureaucrats, and they think they know how to look after us all, which then they redirect the monies into projects that, well, you know, you and I should thoroughly enjoy, like Dr. Su's favourite one, How to Read a Ruler, with $273 million going into the pockets of the Institute of Measurement or the Genital Society, etc. One of the great ones in America was the 50 million that Trumpy got worked up about going into a program in Gaza for new condoms. Now that seemed to be a pretty legitimate situation, I would have thought. But the best one was when they had another 20 odd million going to Sesame Street being produced in Iran. Thought that was a beauty. So you have all these wonderful little projects. The bottom line is it's coming out of your pocket, because it all starts the day that you open up your social media app and you start looking at stuff. Now, AI is designed to extract more money. It's not designed to give you this powerful wealth of more knowledge. No, they don't want to do that, because you could turn that on them, which people are starting to do. But then they'll charge you for that, the privilege of having information. Ironically, history creates that information, and you generally, again, fund it. Without taxpayers, you don't have any programs that contribute money to new inventions, new concepts, and all the rest of it. And that's where we come back to the SpaceX IPO. Because, and even Tesla, I mean, Tesla got its early start because the government funded tax credits in trying to reduce carbon emissions so that we all have a better life with electricity. Well, that's turned out a bit of a pear-shaped job. And then we've moved on. You know, Elon, he's had one loss-making company. He moved that into making profit with grants and things. Got a few bob on sales. He folded that into his other loss-making company, which is X, for a few $100 billion, even though he paid 44. And now he's folded those into a thing called SpaceX. And as you know, people, he's chasing $80 odd billion, and hopefully he wants to do a few things with it. And he wants to bring, again, you, the small person, retail person, they call that the retail sector. They call you the consumer, into play. Now, thankfully, at this stage, it wasn't too expensive for Dr. Zu to do a complete, comprehensive, critical analysis of the speculation in relation to SpaceX. Right? Now, I'm not giving you financial advice. You can buy what you like. Dr. Zu said that from day one. You're on a path, you're on a journey with ZuCoins. There's a mission, there's a program, there's the upside, and that will or won't be achieved. But the vision is that Dr. Zoo does want to go as high as a new Gulfstream, as you know, which is $1,000 US a coin. But he's not too keen on worrying about getting to Mars. Couldn't give a stuff. But he is interested in the numbers as to how it's possible for a company with the balance sheet, the P&L. Dr. Zoo loves all that stuff, loves looking at numbers and crunching the fine print, massive big IPO report, and working out, well, how does the math add up? So it's not Dr. Zoo in this instance saying to you people, look, you got the right to buy what you like. If you like the journey and the crazy ride you're going to get if you have some SpaceX shares, sure, you might double your money, you might triple it, who knows, because that's the Elon effect. But there is a bit of a cautionary note. And interestingly, when all of this was bundled up, including the great ASIC, the Australian Securities Investment Commission approved a sort of a wrap around the IPO document that was produced for SpaceX in America. Our illustrious leaders of the regulators here decided that they'll have a squiz at it, threw in a whole checklist of things that sort of make sense, and said, okay, there it is. If you read that, then Australian retail people, that is retail, that's you and I, consumers, can go in there and knock yourself out and put a few bob into SpaceX because our ASIC has had a look at it. Now, when you look at speculation, if you're running a racehorse, you know there's a certain number of horses in the race and you know the risks. And suddenly you can sort of say, okay, there's a 1% chance of getting a Group 1 winner. Alligator Blood won 7. He's a Group 1 winner. It was a 1% chance. It was even less a chance, 0.3% chance, because he had a complete spinal operation to completely change his back and vertebra because he was in absolute serious pain before that great race at Stradbroke, which is 4 years ago this weekend. Now, the chances of a horse in the world coming off the back of effectively a broken back, being repaired, rehabilitation, and winning a Group 1 is far closer than you think to actually looking at the prospectus or the IPO document or the wrap of SpaceX in getting to Mars at a $1.75 trillion valuation, people. Now, Alligator Blood was the only horse in the world, as far as we are aware, that's ever won 6 Group 1s coming off major spinal surgery. Only ever. And you may or may not be aware, but the name Alligator Blood was deliberately created by Dr. Zoo because it's a poker term and it means to be resilient, tenacious, and never give up. Initially designed for the business programs that Dr. Zoo's been going through, but of course we have some amazing family memories that on the 12th, which is not far away, that's the date that my beloved wife passed away from fighting cancer after a extraordinary journey of 3 years that no one would ever want to go through. And those people with cancer, we feel sorry for you guys to get through that, of course, and the families and what it means and the pressure that puts everybody under. But she never gave up. Never gave up. Now, when you look at the risks in a racehorse like that, or any racehorse, there is a couple of little bright sparkle spots. One is it's tax-free in terms of prize money. 2, if you structure it right, you can get tax-free from the breeding side, not running a breeding operation, but you can certainly get a big windfall dividend. And then of course, what you do spend, you get the thrill, you get a minimum number of horses in a race, so you know your odds. If you had any mathematics, like Dr. Zoo thoroughly enjoyed 3-unit mathematics, created a few interesting programs himself. you would appreciate that the analysis of what AI can now do, not only from looking at future prospective horses through confirmation, through pedigree, through history, all the rest of it, the same analysis, ironically, is what Dr. Zhu produced on SpaceX. Now, why do we say SpaceX is important? Well, because it's a convergent of interesting times. Would you believe the amount of money that's being sucked out of the market in order to facilitate the retail sector? That's the consumer. Remember, the consumers already have been sucked into the internet with your data is being used to produce revenue for the big guns. That's your data. And that revenue gets spilled out into new technology, which includes AI and massive infrastructure development, massive burden on energy and costs, because it's all data. Now, Dr. Zhu has had the big picture, which is there for everyone to see, about how he can reconnect easily now merchants and consumers directly and eliminate that middle group of pariahs that are taking the money that should be going to the consumer. In other words, Harry and Guru in the coffee shop no longer need social media to convey the message as a $20 discount in cash value to you, the consumer, through Google or any of the social media outlets. They can go direct using the technology of ZuCas, ZuCoin fractionalization and tokenization, which is what Larry's on about. Let's focus back on Larry. He's not talking about getting involved big time. They'll have a few bob and hedge their bets each way with SpaceX. He's talking about tokenization. Stick to the big gun. Any bloke that's got $31 trillion in his brain has got to know something what's going on. If you've got the rails, is what he said. The rails is the underlying capacity to handle the transactions. Bitcoin will never handle the rails. Blockchain can never do it. You cannot have trillions of transactions on blockchain for Bitcoin or Ethereum. Already the other day, the great co-founders of Ethereum, they started selling some Ethereum, cashing up their chips, because the costs and expenses are getting out of proportion to the outcome, because there they were and not creating anything on those rails of productivity. ZuCoins can do that. That's what the testing now is relating to, creating these tokens, because even one of those tokens will be globalizing the lottery that we talked about in the $4.3 billion claim for the first time. Technology's caught up. It says, yes, we can tokenize and give ownership proof. Ownership proof in relation to that, because of the firepower of fractionalization, two-factor authentication, capacity to download millions and hundreds of millions of wallets. That's already there as a database. It's important, people. There is already an interactive user database of 4 billion plus people that we can target. There's not 4 billion people that put their hand up to go to Mars at this stage. And we'll talk about some of that stuff. It's an absolute nonsense on some of the projections. Now, when I talk about SpaceX in a tick and some of the summaries, I'm conveying messages to you directly from Grok. The irony is, Elon's very own AI is telling people, if you put the information in and you put ASIC thing in there and you look at the risks and see what's going on, it's telling people the following in a very simplistic form, people. This has got nothing to do with Dr. Zhu's head. This is coming straight from Elon's Grok. So maybe AI is already taking control. Think about that. Here you are, you want to become a trillionaire, you want to put all this airy-fairy stuff out there, you want to get the retail sector involved because they're the ones that burn their ass the first. How do we know that? How do we know? Well, we just talked about how you're getting sucked in with data and money going to Google and Meta and all that. And ZuCas can solve that by going straight to you. Now that means when Harry gives you that $20, of verifiable voucher, provable on the chain, you can either put that on a Zootopia to sell up to that value. It creates a secondary market. You become an agent of Harry and Guru to help get rid of that $20 coffee voucher for people in their business. They don't need Meta. They don't need a 0.08% success rate. They get a 100% success rate because you now can either use that $20, therefore there goes the money straight from you back to the merchant, or you can sell through Zootopia. As soon as we get that Austrac in the bag, you might sell it for $5, but you find a buyer. You make money. You make money, not Meta. Now, the person that buys it will redeem it back to the merchant. You see the flow, people. Mark Zuckerberg doesn't get his grubby hands on Harry and Guru's $20. No way. And even what's more important, none of that $20. Let's assume that Mark, had an epiphany and decided to pay some tax, which I doubt. But let's say he did. No witches on the planet who are in power, whatever gender the witches are, get to spend that on ridiculous projects that they think help humanity in the state or government they're running, like Albo. For God's sake. It passes the value directly to you, the consumer, which means you get the right to determine and use that value directly. You don't need a handout from government. You've got a relationship, what the internet was designed for. But it couldn't do that, ironically, until there was what's called a rail that could digitize that value and put proof of ownership into that digitization. Now, Satoshi had the right idea. If you go and read his original paper, that's what he wanted. Connectivity between peer-to-peer and merchants. But it fell off a cliff because today, at $62,500 US, Michael Saylor would be in a lather of sweat. He is well underwater. They've sent the submarines in, people. They're looking for him. The prices are so pathetic, there is no alternative other than pure speculation because there's money coming out of there, not going to consumers, and now they're going to try and lure the consumer into SpaceX. How do we know this? Well, have a think about it. Dr. Zoo was listening to a show the other night, and NASDAQ has this rule to do with indexes, that the big pension funds and the funds over there of the retail sector, retail funds, hedge funds, etc., that take in smaller sums of money from people, they pool that money and they've got to invest in companies that are on the indexes. Now, it's a miracle, but normally there's a period of 12 months or more of proven profitability and what a company does before it goes on that index. But you know what? In SpaceX's case, they're going to create an exemption that within 15 days, it'll be on the index. Now, the fact that it'll be on the index means that those institutions and funds, which has the small guys' money, must now be invested in SpaceX. So whether the American population like it or not, they've become suckers in being brought into play in something that they may or may not want to invest in, all because they've been forced by virtue of the pooling of money that's in these funds that then has to invest in SpaceX. Now, it might be another coincidence, but it's the first company that's allocating 30%, people, of the entire capital raise that good old Elon's doing. It's going into the retail sector. That's mums and dads. Now, sure, there'll be mums and dads going directly and buying some SpaceX because that's the flavour. And, if you want to double your money, you're going to have to see SpaceX perform from a capitalisation of 1.75 trillion and double to $3.5 trillion odd dollars. I mean, it's absolutely crazy stuff. So to double your money, you're going to have a good look at the financials of SpaceX and see, is that possible? Is that humanly possible? Based on the business model, which has three components, basically. They call it connectivity, which is a wonderful, you know, concept in terms of satellites and things. You've got the Starlink set up, which actually is profitable and has a good multiple valuation according to Grok, which is fine. But then you've got X in there, which is bleeding to death the rest of the monies and creating the losses. And then you got AI, which we're all excited about. AI, because we're going to put a big machine out in space and we're going to send data back and forward, and people are going to pay for that, like the big money spend that we see. Anthropic's going to pay 1.25 billion a month and all the rest of it. But we've got to see what happens with that money and why it's a problem in terms of the long-term visionary design that Elon has. So the numbers are extraordinary, but the critical feature, people, the critical feature is that it's again targeting the retail sector. So through the funds and the index, that's one option. And the other interesting thing was the bigger brokers suddenly out of nowhere, miraculously, have decided to reduce the thresholds for the small bloke to come in and get involved. So you only need $2,000 to get some SpaceX shares. They've reduced the thresholds in those accounts with Robinhood and JP Morgan and E-Trade and those companies. But there's a condition. And the condition is if you want to take advantage directly, not through the indexes and the funds, you can't sell for 30 days plus. Now, there's a red rag. There's the red rag to the bull. So the retail can't get out, but all of those big guns that are looking for an exit strategy based on those multiples, they can do what they like. They can do what they like. Now, what's the coincidence of all this of luring in the retail into this space? Money's getting absolutely sapped out of other sectors, gold, Bitcoin, and don't get me wrong, Dr. Zoo thinks that he could save Bitcoin. Not because he's a good guy, but because it increases the volume of turnover and fractionalization of Zoocoin. So, for example, the reason you're seeing Bitcoin go down and money coming out, obviously there's liquidity problems and it's going into SpaceX because that's taken a lot of money. So is Anthropic, and OpenAI is going to need another $80 or $90 billion. So this one sector is taking the oxygen out of the entire market, putting pressure on shares. You've got the Iranians throwing a few more grenades across and lobbing it across in Israel. That's not going to go well. Oil price goes up, pressure on interest rates, and suddenly the big black swan has decided to pop out, rear its ugly head. But you can say that there is an extraordinary coincidence throughout history that can circle back, people, to what's called the Shiller CAPE, C-A-P-E, ratio. Now, it's named after a fella called Robert Shiller. He won the Nobel Peace Prize in 2013. He's in partnership with a bloke called John Campbell. And they came up with a landmark paper on all of this volatility over the historical times of shares and trading, and going right back to the old Dutch standing on the bridge there that Dr. Zoo's mentioned way back in the 15th century. And you combine their ratio theory with a common thread of people, that is the common bloke in the street getting sucked into these things, and all of a sudden you arrive at the perfect storm. Now, it may not happen next week, it may not happen at the end of the year, but it's a massive indicator it's going to get ugly in the financial sector. And we'll talk about the ugliness of SpaceX in a minute, drilling down as to how absurd and crazy that is. This is coming from Grok. You can do what you like in terms of your own financial advice. I'm not giving any advice at all, other than repeating stuff that Grok has produced against Elon, his master. The servant has turned on the master. And you can check it yourself. But the interesting thing with the Shiller CAPE ratio is it's had some pretty significant historical trigger points going right back. Now, if you look at 1890, Massive panic. Now, none of us were around then, but it was a bit of a terrible time. The banks went down the toilet, and the ratio was at what's a ratio calculation. Now, it's about price earnings. It talks about going back over a 10-year period to work out the price earning fluctuations that companies have that are impacted upon various external events that create this ratio. So if you want to learn more about that, Dr. Zu can share it with you, but certainly the ratio is what's the key point as a result of that calculation, which monitors those shifts, because it's assessing and trying to get a handle on, overpriced companies, which happened during the course of history. So if you look at this history, in 1890, the ratio was about 19. Now that period of time, guess what? There was a blowout for the same things we're seeing today. There was a market decline, economic depression, overinvestment in railways, banking failures, and all these shocks. And the small bloke in the street was the one that invested and suffered. Now there's the first connection, retail. Not the big guns, not the big banks. They don't care. They just take shareholders' money, soak it up, pay penalties if they have to the government. Government gets more money. That goes back in the coffers. It goes around the loop. The next one. In 1929, the particular Shiller CAPE ratio hit 33. 33. Now, we all know what happened in 1929. It was pretty ugly. It was very ugly. In fact, it was so ugly, it was ugly. Why? Because some bright ass in the bank said we're not getting enough share trading, so let's think about a concept that creates margin lending, and we will lend people, the retailer, that's you and everyone in the street, extra money secured on the shares. Everything's going to go whoop, whoop. It's all going up. We're coming out of the 1920s. Fantastic time. Lots of dancing, few drinks on the grog. Prohibition had just been fixed up. And there it was. When it went off a cliff, the retail suffered. They couldn't fund the margins. People lost their jobs, and therefore that was a self-fulfilling prophecy. People can't buy goods and services. There it is. You need the direct communication, people, between the merchant and the consumer, not the middleman that says there, hey, listen, we'll take that middle bit. And in 1929, took 4 or 5 years to get out of the mess. In 1972, the ratio was at 18. 18. We're not talking big numbers here, 18. And that had massive stagflation. Property was a nightmare. Oil, political geoshocks. But they invented new ways for people to get into property. Let's encourage them. Let's have a precursor to the big one in 2008. Now, the capex in the dot-com boom, because they unleashed the beast again to the retail sector, more buying and selling by small people, hit a ratio of 44. 44 when the dot-com sector collapsed. But it flushed out the good companies. It flushed them out. Now, 1987, the big one, Dr. Zu was in that one. He reckons the ratio is a bit higher because it was a lot more savage. But there you go. The ratio was only 20. Now, the point of these ratios, and we know what happened in 1987. Liquidity, the big guns were borrowing. Everybody could get money. It was no problem. Robert Holmes at court, John Elliott and the boys, billions, I think. Dr. Zu's had a personal connection with John Elliott. That's the ex-Carlton president. You might love him or hate him. He doesn't care. Dr. Zu doesn't care. He's a great guy. Done a lot of backwork research when Big Jack was doing the takeover for BHP. He actually got shafted on the preference shares. Can actually prove that. BHP, if you're listening, you got away with it. Nevertheless, and they're not a debt instrument, by the way. They're a convertible instrument that you should never have been able to pull the plug on him. But there you go. Another day for another story. Now, John Elliott told the story in a 20-hour session, Friday through till Saturday, raised $1.5 billion and a lightning raid on the Monday. Picked up the stock, got 19.9% overnight. They were the days. But it came at a cost because everybody else got involved with margins. When 87 went off a cliff, Boom. There it was. Another collapse. All about liquidity. Everybody was selling anything and everything. Property. It was a terrible time. Gold. Even gold companies that had substantial cash flow. I remember Dr. Zoo, company called Forsyth, hit a share price of $6.90. Gold, 200,000 ounces per annum. Solid, rock solid balance sheet. Not this stuff that Elon's talking about doing. Positive cash flow. No debts. And it still went down the toilet, back to 30 cents a share because everything else collapsed. Now, where does this lead us today? Well, let me tell you something. There's got to be a scenario where you can see the market festering around you. And it's Dr. Zoo's prediction that we're going to look back one day at SpaceX as being the trigger. A bit like the tulips. Now, the CAPEX wasn't available back then in the year 1637, but the tulips weren't just about buying tulips. The tulips was one crazy son of a bitch time. It's interesting. Just to digress, 2 seconds. Religion played a big role in the tulips because people weren't allowed to show their ostentatious habits when they became rich. The Calvinists decided it was naughty to flash around your brand new horse and cart, flash horse that you got, your house, etc. But you could show how wonderful your tulip was. People decided to have generic brands of tulip because my tulips are better than your tulips. And then all of a sudden they ran out of tulips because they couldn't grow them quick enough. So some genius came up with the idea and said, listen, you sign this bit of paper, and once the season gets back into play, I'll lock down all the blue tulips for you. And you'll have a piece of paper like a futures contract that says, here you go, you have the right to X number of tulips in 6 months. Boom, there's your first contract. A futures settlement. How cool. Guess what happened? Massive amounts of paper started floating around. The retail sector again got caught out. People running around with these bits of paper saying they're entitled to tulips. And then an ice storm came in and flattened a lot of them, and there was no tulips. Suddenly there was panic. They couldn't on-sell their bits of paper because they couldn't get delivery. That's what caused the big crash in 1637. Now, we've done some reverse engineering on the Shiller CAPE ratio, and it was at 57. Bloody scary stuff. But it caused by all the environment which sucked the life and the blood and the money out of this market because of the retail. And here we have massive, massive retail money, whether you like it or not. Governments in a position to take that away from you. And even in Australia, here we go, we've got these fruitcakes zapping the money out of equity in houses. You've got two choices. Your equity drops below your debt level. You can't pay. You're gone. You sell. Suddenly trillions of dollars becomes the problem of the day. Liquidity. And if they force it into the hands, certainly ASIC approved the wrap. They call it the wrap around the SpaceX document. It was wrapped all right. But no one sat up and said, well, hang on, let's have a bit more look at what is Elon, what is he smoking this week? How in the hell can he meet some of the benchmarks in the SpaceX, which is identified by Grok? Not Dr. Zoo, Grok. Well, you combine that with the Shiller CAPEX as of today, it's at 41.5. It's the second highest in record for the current millennium of what we look at with the CAPEX. Put aside the rough estimates that we calculated back in 1637, because remember there was no actual trading markets to benchmark that against. That was the sort of the start of the company concepts. The Dutch, they started all this stuff. And that's why you see pressure, because all of a sudden crypto, meme coins, altcoins, Dr. Zoo did another number. There's 11.3 million coins down the toilet in the last quarter because they can't find a purpose and what to do with them. Technology is magnificent. You've just got to make sure that the solutions are in play and you look at the future as to how you solve those problems, which is what Dr. Zoo and his team have been looking at doing for all these many years that you'll take the benefit of. Why? We've talked about scalability because you need an alternative purpose. You don't want to sit there like a dead duck in Bitcoin knowing that you're waiting on someone to buy for speculation when they've got a liquidity issue happening right now, going into other concepts called SpaceX. That's even more bizarre when we go through it in a sec. And all of a sudden, the Shiller CAPE ratio says that you're in real trouble. At some stage, we're peaking. We're peaking consistently with those other ratios, but at the second highest level in history. And people are running around looking at, they've got problems. They can't rationalise their wages because of the pressure that's come about because of poor government policy. Fuel, health, education, kids, you name it. The list is long and illustrious. Absolute poor management of taxpayers' money. Another theme that's consistent with every Labor leader has been at the peak of each of these Shiller CAPE ratios. There's been a fruitcake Labor leader, incompetent. I mean, look at Paul Keating. Good God, he's running around saying what a great idea changing the CGT is, and yet he was the dimwit that passed all the legislation on the native title. Wouldn't have had any native title if he hadn't passed that in 1993. What an absolute ridiculous concept. There's ways of compensation, etc. you can do, and there's ways of helping. There's no question. Society's designed for that and put the safety nets in place. You can't do that when you're creating different classes of people like the witch. Again, Dr. Zoo apologised because he's not sure whether it's male or female, but there you go. Or trans or LGB and all that. We need to get some clarity from the politicians in a Senate estimates as to what is a defined witch before she gets upset about it. So, CAPEX. We're talking about the Shiller CAPE ratio. Monitor it. Keep an eye on it because it's telling us something. It wants to share its wisdom about this perfect storm, this big black duck. Now, what's the biggest black duck? The SpaceX IPO. Let's just look at some basic fundamentals of the thing. $1.75 trillion value. There's not a multiple in history that comes anywhere near creating that value. Nothing. What's even more disconcerting is the basis upon which people are putting their hands up saying this is a beauty. The only reason you'd back it is because you like Elon. I like Elon. He's a good guy. He's got the vision like you wouldn't believe. He's well outside of Dr. Zoo's comfort zone. Dr. Zoo cannot see the benefit on putting stupid people from Earth onto Mars and become more stupid up there. But anyway, Grok says this in a summary. The valuation assumes success in multiple sectors. However, a deep dive into the financial statements reveal the following: significant losses, large accumulated deficits, substantial debt, enormous capex requirements. In other words, enormous capital problems. Now, someone's just asked about where does this leave Zoocoin? I'm saying to you that there is always a silver lining, and by fluke or chance or otherwise or hard work or long-term strategy, you may recall Dr. Zoo said he was focused on not being dictated to by the big guns and the financial institutions that create this mess. Whichever way you cut it, SpaceX is created in conjunction with the big players and the big banks and those that want to jump ship to get their money from the IPO. And we're talking some serious doo-doo here, serious doo-doo. They found a way to effectively force the small player and put pressure. Now, they could be short selling. The poor retail person comes in and buys the SpaceX shares at X dollars, unbeknown. The banks don't care about that. If the price collapses 40%, they've all short the stock. They've cashed their chips in based on their IPO settlements of what they put in originally, and then they double up and make more again. But it's the retail that's going to suffer because it's governed by the big players. In our case, Zoocoin has got utility. It was designed not to be a speculative play. It was designed to be a true utility, which is achievable because of the structure, the underlying democratizing of the entire e-commerce system. It gives the capacity for scalability, which cannot be achieved with blockchain. Cannot be achieved. No matter which way you cut it. You can have a centralized database, you can have MasterCard and Visa, and they can have trillions of transactions, but that is not the concepts of blockchain and the way in which data is stored or can transact. Bitcoin is stuck at 3 to 7 transactions per second. And we talked about this the other day. We do not know which particular businesses are taking a hit in just keeping blockchain alive for Bitcoin. Because at $88,000 per block to try and get a coin to cover costs at 62,000, you do not need to be Einstein to work out serious losses are being made just to keep it alive. And when it runs out of Bitcoin to mine, you're in double duty land. It goes completely pear-shaped. We do not have that problem because we designed specifically the best, most modern highway you could possibly think of that allows all types of cars and trucks to have a go at it and be on it. Whether you're a Lamborghini or whether you're a Volvo or a mini miner, you get to play the game with ZooCoins and you get to deal with a big market, with a alternative source of demand for the coin or fractions because you have productivity. There is no limit to the types of goods and services that can be tokenized. This is what Larry Fink is on about, but he's hamstrung by the very nature of creating. You cannot create a $20 voucher on Ethereum. Will not happen. Will not happen on Bitcoin. The costs and fees and charges is dead in the water. So therefore, the entire life cycle of Bitcoin now rests in the hands basically of one man. What will Michael Saylor do? Because if that 834,000 Bitcoins get dumped, there's only one way it's going. It's only on pure speculation. Now, they might hedge that with a short sell, and you'd be crazy if you didn't. Michael Burry, the main man from The Big Short, when they shorted the entire derivatives market, if you like, to do with the housing crisis in 2008, they played the game. They knew something was coming, and they covered themselves with those shorts, made a fortune, made billions. Now, the protection mechanism, it's a lot easier to continue with millions, if not tens of millions, and we've got only limited by the size of people with iPhones or Androids. We have massive upside, and it's a massive upside that says, as we've said all along, you buy 10 coins, tuck them away. 10 coins, tuck them away, because that will absorb and bring back the formula that Dr. Zoo loves, the quantity theory of money, which means simple exercise in there becomes more demand and less supply, but you've still got productivity because the fractionalization will allow the delivery of potentially trillions of transactions, which cannot happen on the other systems. Now, don't get me wrong. We've talked about it. The second mouse gets the cheese. We're very happy being the second mouse. We're slow out of the blocks. We got things right. We ticked the boxes. You patiently waited. Even the iOS thing the other day, magnificent. One press button. Dr. Zoo, really happy. Really happy. Success rate near 100%. Just got some more people educating about how to download the wallets now, but that's because we've got to keep them happy with not losing them, of course. We don't want anybody to lose coins. If you download and store on a USB or secure your phone and store it in folders or on your iPhone or Android, you will be happy. Outside of that, the accomplishments is a bit like, do you want to run around with an old system? I listened to this doctor of whatever she was the other day going on about it, and it's all because no one put the energy and time into looking at the problem from day one. From day one, Dr. Zoo was worried about Bitcoin Well, not necessarily straight from day one, but certainly in 2010, late 2011, Dr. Zhu was looking at this stuff. Would be a global solution. Very excited, got all pumped up, and then all of a sudden the wheels started to come off. It made no sense at all that humanity needed to store every transaction since the creation of blockchain. It makes no sense. And some of this, let's just cover off on it, makes no sense in SpaceX by sitting back, getting Grok to have a bit of a squeeze and looking at what is the ultimate outcome of putting your ass in space. Just think about it. Now, let's have a reality check. Aside from the internal corporate structuring and the balance sheet and the P&Ls, which look pretty ordinary, there is revenue coming through from one division, which is the satellites. But let's talk about those satellites. Now, I bet you didn't know that you send this stuff up into space, the satellite, you've got to get it up there first. So that's where the launches come in and all the cost. Now, in order to do that, to get him where he is today, right now, SpaceX has spent $41.3 billion accumulated today to try and put all this stuff into play, because it's a huge, massive capital expenditure. You don't just wake up in the morning, go out the backyard and launch a rocket, right? But then Dr. Zhu thought about it and said, well, okay, if all these technical problems are overcome, why hasn't, with all that technical advancement, NASA created the world's greatest capacity to launch these things into space? Now, you may be right. You may be thinking, well, NASA is the first mouse. The second mouse gets to choose, which is Elon. Elon takes all of the mess that's caused by NASA. Now, you've got to think about it. For 60 years, the numbers by Grok suggest that NASA has spent, which is government tax-paid money, $1.9 trillion to get a couple of ships that blew up, one lot of blokes to the moon, and others are getting radiation treatment. 1.9 trillion. Yes, we've got satellites floating around out there, but have you ever thought about what happens to a satellite? Well, let's look at the satellite division, which is that's the band-aid that's holding SpaceX together on its nowhere near $1.75 trillion valuation. That is just airy-fairy. That is well outside of Dr. Zhu's comfort zone. I've said that before. They had a net loss through the divisions of $4.94 billion. You can't even work out EBITDA because you got depreciation when these things frizzle up in 5 years. I bet you didn't know that, but each satellite has a basic life of 5 years, right? So they're running a debt level at the moment on that basis of $29.1 billion, which they're going to pay out of some of this money. So the early investors cash out. They don't bother taking the future risks and what's required on capital. They've got some shares left over, and they're going to need plenty more if you go by the analysis of NASA at 1.9 trillion. But anyway, the problem is that the Starlink side of the business cannot sustain the other parts of the operation. It's a black hole. If you kept Starlink to itself and got a more reasonable valuation, sure, you might be at $500 or $700 billion, be a perfect little company running. It gets revenues about $11.4 billion, makes an operating income that's not gobbled up by all the other bits and pieces. And, if you take that big chunk out of the business, SpaceX is in real trouble. Again, I'm only repeating what Grok's come up with. Why? Now have a think about this, people. Satellites. You put the stuff into space. They say it's got an operational timeline of 5 years. Now, the capital return, you can only have so many subscribers per satellite. You can't put 1 billion people hooked up to a satellite. So at the moment, the geniuses are running around with 10,000 satellites, roughly at 1,000 people per satellite. That's 10 million people. But these things die in 5 years. Why? Because of radiation exposure, thermal cycling, orbital degradation, hardware aging, collision risk, unable to repair. Every satellite that's out there today must be replaced on this timeline cycle. Therefore, you need to build new satellites. You've got to replace the satellites. You've got to launch the satellites. You've got to launch the replacements, and you've got to have somebody that's fruitcake enough to go out there and fix it. You don't sort of bring them back. They only come back in one way, and that is straight back down in a hurry. You get fried. Now, aside from the satellite division, you then get into the juicy bits, which is the AI. And this is where Elon goes. He said, look, we'll put out a big body of servers out in space. They get all this power from the sun. They also get plenty of radiation because no one has solved the radiation problem. You get fried, especially humans. There's another element to that. And they call it the TAM analysis, TAM, which is the total addressable market. Now, this is the theoretical maximum revenue opportunity. They use this benchmark for a company when you're talking about the prospects of the valuation model, which then gets it to somewhere to 1.75 billion. Now, this is mind blowing. They're saying that the total addressable market, that is, when you think about putting satellites as a satellite division, they're saying there's a cap of about 100,000 satellites because guess what? They all bump into each other. They've got to have their little programs and say, hey, whoop, hang on, you go left, I'll go right, and we won't hit each other. Now, that's a capacity generally used the way in which it sits in space, so it doesn't get the galactic radiation burning them. Less than 5 years, you could have 100,000 bits of crap floating around in space. He's already got 10,000. Now, even with that, that's a limitation on how many subscribers you can have because you're not going to get 4 billion people. The maths doesn't give you that sort of connectivity when you look at the space satellite component of the business alone. Now, let's say it's $500 annual revenue per customer. You're going to need, they're estimating, this is their numbers, that in order to support this valuation, just in the satellite division, that the TAM value, they've attributed $1.6 trillion. So that means you need 3.2 billion customers, which is 40% of humanity that would need to be direct SpaceX customers running around connecting to satellites. 3.2 billion customers. Now, let's say they double that and they charge $1,000 a year, then you still need 1.6 billion customers. Now, you know, it's 1,000 customers per satellite, roughly. Right. So if you had 1 billion customers, you're going to need 1 million satellites. If you had 3.2 billion customers, you're going to need 3.2 million satellites. Now, this is where vision, and lots of credit to Elon, great guy, collides with mathematical reality and physics. You can't get even 100 million customers with 100,000 satellites without everything imploding with each other. So the maths makes no sense. If you're going to get the upside on trying to get this TAM value to 1.6 trillion, $1.6 trillion, they're saying, and that means that's the potential for that division. That's the total addressable market, which is the maximum revenue opportunity based on the satellites, which is 1.6 trillion. It's impossible. Now, Dr. Zhu would love to interview Elon and get his thoughts on this and have a chat. He's available twice a week. Dr. Zhu's here. And what we would do is we'd set up a conference call between Dr. Zhu on the one hand, Elon, and we'll try and get Grok into a voice mode with answers and questions. So that Dr. Zhu's supported by Grok. So in a way, it's like family because Elon would be talking to his little proteges and getting answers directly as to, well, what does that mean? Where has Grok got it wrong? If the physics of it all tells us the quantum of satellites that can wander around in the sky that need to be replaced. Now, this replacement, because you see, you've got all sorts of issues that then arise. You've got collision risks and debris, conjunction events arrive, regulatory scrutiny, insurance costs increase. I mean, it all sort of keeps going on and on. Now, if he was to deploy and work out more space to put them, maybe they become little satellites with more firepower. We haven't invented that yet, but that could happen. And he had 1 million satellites, and the deployment cost is $1.5 million each. Every 5 years, he'd need $1.5 trillion. Now, that's not in the budget. Now, I appreciate ASIC doesn't have to analyse this stuff and say this is, airy-fairy or whatever, because that's what regulators don't do. Although, having said that, people, in the 80s, if you got carried away with thinking that you might have more gold in the ground than you actually did, you got to wrap over the knuckles. You got hauled over the coals, baby. You can't go out and say you've got 20 million ounce potential of gold because you mightn't have enough land. And they'd certainly rewrite that. And you had to get a geologist report and, there's estimation of reserves. And all of a sudden your prospectus, went from $100 million capital raise to back to 10 because the powers that be would say to you, well, you've been naughty. You can't estimate those airy-fairy numbers. But nobody seems to worry about an expenditure on replacement satellites in a limited space in the sky that can put these things. Now, they're suggesting, even on best case scenario, this grok, that the annual replacement burden would be in the order of $150 to $300 billion a year. Where does that money come from? If you've raised 80 and you pay back 43, you get your calculators out, have a squiz. There's not much change left, especially when you have that sort of expenditures and you still haven't got to the juicy bits about the so-called AI plants that are going to get this revenue streams to feed this expenditure that the other companies who are sucking money out of your pocket. Remember, we talked about the money coming from you, from advertising, using your data. And suddenly Google and Anthropic and OpenAI are paying billions of dollars annually to good old Elon, who's saying he thinks he can handle the capacities of data in space despite all these other problems. We haven't even got to the juicy bits yet. But radiation. Now, if NASA has spent $1.9 trillion in 60 years and they still can't work out a jumpsuit that protects humans properly, it intrigued Dr. Zhu as to how in God's earth can you possibly put people on Mars? I mean, you're not going to get 5 billion people going up in planes all of a sudden to cover the costs. That's never going to happen. We're having trouble getting subscribers on scale. Dr. Zhu's got more chance of getting 4 billion people into a Zhucoin wallet than Elon will ever have of 4 billion people subscribing to satellites floating around Earth based on these numbers. They're not going anywhere. They're already in existence. You've got your phone in your back pocket. You just need utility and you need a user case scenario, which we've built out, that gives the best opportunity to even think about that sort of ratio of numbers that could be adopted in mass adoption through a Zhucoin wallet. If you want to play this game on what is the total assessment market potential revenue. Now, when we looked at this and we said, okay, you get out in space and you're having a great time. It's not like you go up there and you're sitting on the Bahamas there with the pina colada and looking out the water. You're talking cosmic rays, solar events, blips, hardware degradation. And then you start to dig deeper about NASA. Now, it turns out when the boys dropped themselves onto the moon, and, it was a big step for one man and bigger step for Elon, it turns out that any of the research papers sourced by Grok will tell you that there's a lot of luck to be played. The calculations that were made by NASA, they needed a window of calculating the best time there would be the least amount of solar radiation to fry them. Now, you get some protection from the little craft, But when you're bouncing around out there on the planet and there's a solar flare and there's a radiation hit, you're rat shit. Now, NASA does give advice that when humanity finally ends up on Mars and, you plonk yourself out there and away you go, you have a good time. NASA does say there's a couple of problems we got. They haven't solved the radiation shielding challenge. All right? Now, this even goes for the moon. But there is a solution that if we do get enough of the AI robots, now they can fry as well, because we haven't solved that problem yet, but let's say we get rid of that and then we get a couple of diggers up there. What you can do, and this is fair income. This is fair income from the research papers of NASA. You dig a hole of 1 to 3 meters and bury yourself under the dirt, the soil. They call that the regolith, which is a big word for soil. The top crusty bits of the soil on the planet, a bit like you go out in the farm and you've got some nice, soil that's sitting there that's growing the corn, and you go down a few meters and it's still beautiful, nice black soil. That's the stuff we're talking about, except a bit more crusty up there on the moon and as well as good old Mars. But you can dig a hole and put yourself under there, and that will give you some protection, which is a strategy they want to build on Mars. We all live in a hole. Now, it's not sounding very attractive at this point, but certainly cost-wise, it's not going anywhere near the costs that SpaceX are even thinking about just to get anywhere near the $1.75 trillion valuation, because in order to deliver that outcome with all these things, despite all these problems, that doesn't include the human reproduction problems. They've got fatal issues with babies, excuse me, on Martian gravity and long-term reproduction and multi-generational radiation exposure. Wouldn't have a clue. We had enough trouble with that crap injections we got with the, during the COVID period. Imagine them trying to work out what's going up there as you start to grow two heads on Mars, because we haven't had enough people up there experimenting, living there. And Elon wants to put us all there and tell us there's a value of $1.75 trillion, and it comes down to one line. Now, what he's saying is, despite the total addressable market value for what I just talked about, the satellites, which is in itself mind-blowingly, unbelievably crazy, then you've got the AI segment. Now, the AI segment is where he says that we can deploy this stuff, and rather than having a big AI plant down here on Earth, we put it out there, and we still got all those other problems the same that face the human with his suit. They've still got a problem with all the other bits and pieces we talked about. But this is the mind-blowing part. They're saying, you wait for it, that the TAM, the total addressable market, that is the maximum revenue to be generated from the division of AI, will be $26.5 trillion. So 93% of the total market potential of revenue is going to come from this AI division, right? 26.5 trillion. Now, what does that mean? I'll tell you what it means. It means that without the bits and pieces, of all the satellite stuff, which is capped anyway, because we just talked about 100,000, maybe 200,000 and all that stuff as a separate part of the business that's getting soaked up with all this capital. In order for the AI division to achieve $22.7 trillion, that represents 23% of global GDP. It is the largest single market ever proposed in human history. Elon says that his AI is going to reinvent completely every single thing we know about enterprise software spending that's never been done ever in the history of mankind. Now, we bow down to the great man. Dr. Zhu says that the size is mind-blowingly unbelievable, that there'll be no other real competitors, Everybody will be through Elon. Now, Dr. Zoo spoke to Dr. Spock, and that is absolutely ridiculous. 23% of global GDP he wants to run through these AI applications at $22.7 trillion to come anywhere near the possibility of those revenue streams and money in terms of the valuation. Now, already we said just on his satellites, he needs 40% of humanity to be joining up. That's a huge ask in its own right, let alone 23% of global GDP of every country on planet Earth in order to achieve an outcome by putting stuff in space that's designed around AI. Now, if this was April Fool's Day, which it's not, you could understand the production of this document. You could really sit back and say, I get it. The retail sector is going to be played with. The small bloke in the street, ASIC signs off on it on this wrap from Australian investment perspective, which I think I saw someone just yesterday say, listen, you can invest in Australia from anything from as low as $1 and as high as 100 million. Can you believe it? Now, this might be the greatest share price rise in the history of mankind because people say, yes, he can achieve that level of adoption on a scale that has all the profound issues with it in terms of just the equipment that needs to get there before you even start thinking about taking on 40% of humanity. Now, that was Grok speaking. That was Grok speaking against that. Even the multiples for Grok never made any sense. You know, at 94 times multiple of any sort of level of earning, or 107 times. Just extraordinary. What we can say, though, is that like the previous markets, there was always this hyped up level of explosive values that had no correlation to anything that even could be possibly remotely considered as part of the businesses. And that happened in the 80s. Dr. Zoo was right there. The companies in that era, Bell Group, Bondcorp, they were just Australian-based ones, let alone things like Enron that came about later on because of absolute phony projections of revenues and all the rest of it that took these things back to Mars and back again. Well, people, I think that just about ties in the three layers of what Dr. Zoo has been on about. Because in closing, having a TAM where current revenues are 18.7 billion, and Elon's telling you that he's going to get that to 28.5 trillion, that's 1,525 times current revenue. Even if revenue grew 20% annually for 20 consecutive years, the maximum that could reach is 717 billion, which would represent only 2.5% of the total current claim of 28.5 trillion in the IPO. Now, you'd think that someone would have sat down with Elon, turned Grok on, and said, "Listen, let's have a think about this. When does this become borderline humour, stupidity, or will it be one of the great tulip events of the mankind in this century? Are we looking at the new tulip era, people?" Well, Robert Shiller and his little ratio certainly gives us an indicator that something's coming. Mightn't happen now, mightn't be down the road, but let's be ready, because ZooCoins, in its humble little project of tidying up what's in front of it, can sustain the ability to take on the big guns in the advertising world, get value direct to consumers and merchants, change the entire dynamic of commerce, sit back and relax that the rails can handle it, that there's ownership proofs, there's consumer ease of using it, and that's circling back to what? Larry Fink said the other night that I indicated earlier, that you can turn a blind eye and let these boys spend what they're doing on AI, do what they're doing with SpaceX. Quantum computing is going to be the wild card in all this. It'll smash the speeds at which we look at these things. And then you circle back to what's the reality and what's in front of us in terms of commerce and how it sits, of which we are at the forefront, because we have the breakthroughs on all of the technology that we're using to make that happen. And there will be other geniuses that come out of the blocks that will be adding new product lines as well, people. That's what it's designed for, peer-to-peer plus the marketplace. On that happy note, everybody, do your own homework, research, put it into Grok, get into ChatGPT. It'll analyze the entire hundreds and hundreds of pages of what you want and give you an overview based on the realities of e-commerce, statistics, the analysis from an accounting perspective. You can do your own work, and good luck to you. If you want to get involved in that space, well, let me say this. There's no way Dr. Zoo is going to put his ass in any little satellite or plane or whatever it is that's going to get us to Mars, because there's no reason to be spending his last days 3 meters under dirt hoping that someone arrives from DoorDash with his meal, which is not far away. And that's how it's going to be. So that's it for today. Thank you very much. We'll keep you posted as soon as we get anything getting closer with Austrac, and we can tell you the boys are instructed that the moment you see that is the moment that you can turn on, and we will be going full throttle with all of our plans, which are on the website. Look up the Zoo Vision. We might even get an update on this big picture stuff now about how much firepower we have as a bit of a summary, which is us taking the market share away from the big guns I've talked about today. So you get your heads on it. The more fractions, the more productivity, the more utility, the greater the demand, the greater the price. You can relax. You won't be subjected to massive external shocks that are coming, if not already starting to work their way through with things at the moment. Cheers, everybody. Have a good one. Catch up soon.